One thing I discovered when it comes to trading futures, no matter what market it is, I always see most traders out there not understanding how to read the candlestick charts the correct way. All right. It is not complex. It can actually be very simple if you understand one key concept, which you all should know by now, is market structure. And what is that? It's being able to understand the flow of the market and the direction that the market is trending in, whether we are moving to the upside and making higher highs and higher lows, or moving to the downside and making lower lows and lower highs. Now, a lot of people have a hard time understanding or identifying the reversal points within the market, okay? And a lot of traders out there simply should know that all we're looking for, most traders, is where the market is running a low. Say if the market is trading to the upside and you have a high and then the market makes a low, which is a higher low, and then it breaks structure to the upside. But then you have where the market takes out that most recent low where it runs lower, okay, and takes it out. And then it creates what a lot of traders will call a chalk or a change of character, or it could be a break of structure to the downside where the market reverses that. It's a simple process of just being able to understand the flow of the market making those higher highs and higher lows, or reversing and making lower lows and lower highs. In today's video, what I want to share with you is the correct way of going about looking at your charts, studying the candlesticks to be able to determine those turning points in the market, the trending points in the market, or the areas in which the market is actually moving to the upside and forming a bias, trading only to the upside, or looking for an opportunity to trade short if the market is moving to the downside and is breaking structure lower. This all comes with the territory of understanding and trading supply and demand zones at its best. Now, one of the key concepts as well that I would like to discuss in this video is being able to know valid areas of imbalances, okay? Meaning that when we trade supply and demand and we mark off our zones on our charts, we want to identify the quality, the high probability points or zones within the market that we can look to take trades from. Now, this all comes with understanding, the overall direction. You have to get it right. You do not want to be counter trend trading against the, a moving train, meaning that if we're bullish to the upside, why would you want to be counter trend trading to the downside? Okay. I'm not saying that you can't 100% do so. Like, for example, if we're bullish to the upside, right? And then you notice on your lower time frame chart that the market starts to break structure lower, okay, and takes out or has a reversal point where it's taking out the structure to the downside. That could basically be just a pullback on a higher base or higher time frame chart. For me, I'm trading range charts, and you can look for a pullback to go short to a key area of supply, but you got to understand that trade can be very short-lived because the market overall direction is what? Moving to the upside. Again, if we're bullish and we're noticing that the market is breaking structure on your lower time frame, your lower range, your lower tick or lower volume charts, okay, and looking at the candlesticks and how they're forming, yes, you can take quick scouts, but the best setups come to where the market is moving in one direction and you're trading with that direction, okay? If it's a bullish to the upside, then you should be looking for key areas of demand on your higher time frame and your lower time frame, or your lower range and your lower range charts just as well, okay? We're looking for prime areas where the market, when it comes to supply and demand zones, where there is a gap fill, okay, when the market retraces back to that zone. Not prior to. We want to see the zone being unmitigated at first when it creates that area of demand or supply. I'm going to show you here on the charts today, and I'm going to show you in a quick video towards the latter part of this video, where I actually took two shorts, okay, off my 24 range, my lower range chart, going short, scalping to where we had high probability or quality areas of supply, all right? So let's talk about it. Let's take a look at it. First and foremost, what you want to do, as always, is get the structure correct. What do we see taking place? Well, you should be able to take a look and see that we're making highs, higher lows, higher highs, higher lows, and higher highs to the upside. Pulling back here, never breaking this low here, and then breaking structure above us, okay? So now we're making a new high. Each time the market makes or takes out the most recent high, all right, especially on your higher base charts, then you need to be looking for, or you should be looking for quality areas to go long. Is this a beautiful demand zone right here? Yeah, if the market would have came back to it, I'll mark it up right quick so you'll understand and see. All right, right here. Had the market came back and tested this zone, okay, but this was in the overnight session, still valid demand zone, aggressive buying, created a demand zone that broke structure here, taking out this major high right here. The market pulls back to it, I would look to go long, but not off my higher base chart. I'll scale down to a lower time frame or lower base, not lower time frame. I say that what I mean by that is a lower range chart, because I do not trade time-based charts. Range charts and time charts are not comparable, guys. They are calculated differently. Of course, you should know time-based charts or time charts are calculated based on the amount of time that has actually passed. Range charts, it all depends on the amount of volume coming to the market. That's what develops and pushes surrounding momentum on candle closures on the range charts, okay? All based on volume. So we got a breaker structure above this high here. Comes back, had it tapped that, I would have went long. Just like right here. The market made a high, higher low, broke structure to the upside, came back, tapped into this valid area of demand right here. You can look for an opportunity to go long, but scaling down to a lower range chart or maybe your lower time frame chart. All based on valid areas of supply and demand. Now, what makes the difference of a zone being high probability or being a valid demand zone or supply zone is that market imbalance or that gap resting back at the actual zone. Let's talk about that right quick. Now, if you see here, we broke structure above this high right here and we made this run to the upside, creating this demand zone. Now, one thing you always want to look for when it comes to demand is the last down bearish candle, and you want to mark up your zone from the top end of the bearish candle to the bottom end of the bearish candle and to include any wicks from a bullish candle if there is. Mark it up like this. Now, we want to see and determine which candle broke above that last down bearish candle on the move to the upside where we have aggressive momentum buying to the upside. This candle right here, okay? This is the candle right here that broke above that last down bearish candle, and this is the candle that we need to measure the gap on, okay? So, the gap is on this second candle right here, and then we look to see after that candle closes, the very next candle, how much does it pull back? See the wick of this third candle right here? The bottom end of that wick, it came back this much here, leaving a gap in between here back down to the bearish candle, top end of the bearish candle right here. So we have a full-on market imbalance resting back there at this zone. Now, when the market, as it's retracing back here to this actual zone, we're looking for it to happen. Look what happened. It never comes to it. It stops maybe by maybe 3 or 4 points right there on the higher base chart. It didn't tap into it, but it still took off to the upside. One thing that happened here, I'm going to talk about this right quick, is that you see where we have 23,000, 40, 40, and 70 are pivot levels, just like how you would think like the half and the round numbers. They're more so hidden pivot levels that a lot of people don't know about when it comes to trading, especially the indice markets, all right? The Nasdaq, the Dow, the Russell, the ES, okay? All right? Especially the ES, all right? 40 and 70 numbers are going to be hidden pivot areas. So when the market hit that 40 area there, it took off to the upside. It didn't even come down here and tap into the, what am I trying to say here? The demand zone, okay? There was an imbalance resting right here. Just like right here. On this case or scenario, there was a very small imbalance resting right here, or market imbalance. You see the market made a high at the breaking that structure over there, pulled back, broke more structure to the upside, aggressive buying to the upside here. This is a beautiful area of demand right here. Again, the last down bearish candle, this candle here with no wicks on it pretty much, broke above this last down bearish candle. That next candle, the third candle, the wick of it came down even, it was a longer wick that came down this much. Still, a small imbalance of maybe about a point there. And you can see around about 1 o'clock today, the market actually tapped into that higher base or higher range demand zone right there. Still valid. That's what makes it a high probability demand zone resting right here, okay? All right? Some of you may call them market imbalances. Some of you may call them gaps, back out of zone, or whatever the case is. Same difference, okay? The market taps the actual box there. It goes to the upside, all right? Now, this off the higher base range chart But what I would do once I mark up my zones, okay, where I see a area of demand or supply, in this case here, demand to the upside, and we have a high probability or valid zone there, I would then move down and wait for the market to retrace to it on my lower time frame, or lower base 24 range chart, and look for an opportunity to trade where there is a demand setup either within, okay, the higher base 120 range chart, okay, where there's a demand zone there, or wait for newly formed structure to develop once it taps the higher base range chart, the 120 here, to show me a demand setup to take a trade going back long. I'm going to show you, I believe it was today, right quick. I know it was actually yesterday. There was a demand zone. I'm going to show you right quick a trade right here where I'm talking about. See how it came back? I'll show you right here. This is the zone right here. See how we broke structure to the upside right here, and then it comes back to this beautiful area of demand right here. Aggressive buying. That candle there broke above the last down bearish candle. Third candle, it came back this far. We have a gap resting right here on the second candle there. The market retraces to it on the 120 range chart, but if we scale down to the entry chart, this is where it taps that larger 120 range chart. What I'm going to do then is either wait for structure to be broken or for it to form an area of demand and look to go long off of on the 24 lower range chart. The market pushes up, creates this demand area right here, pulls back, taps into the demand area on the 24 range chart, and it's also hitting up against the 120 range demand zone as well. High probability, go long, okay? That's what I'm talking about. Or you can wait for a structure break to happen back to the upside where it's taking out some area of structure and then look for a pullback to go long. All right. In this case here, you can take a demand setup as soon as it is created and it bounces off of a rejection from the higher base 120 chart. Now, that's what I'm talking about when in reference to those market imbalances or those gap areas on the chart back at an actual zone. Again, I'm showing you this on the E-mini Nasdaq futures. It doesn't matter if it's the micro Nasdaq futures or the micro ES, you can do the same thing. This all boils down to being able to understand the flow, the trend of the market, getting that correct when it comes to reading these candlestick charts the correct way and not the wrong way. All right. Now, I want to show you today right quick. We'll take a look here. I'm going to show you the video right quick that I took my trades off of. We'll take a look at that. And if you want to understand more about these type trades, you can choose to become either an elite or an ultra elite supporter. Very inexpensive. The link is down in the description portion of this video. If you scroll down, you'll see a link right below the Discord link, right? It's titled Ultra Elite Supporter. If you click on that, 3 tiers will pop up. You can choose either to become an elite supporter where you receive the trade breakdown videos that have helped so many traders out in reference to the style and the strategy and how I trade. I break down the setups after setup after setup in tons of videos. Those are trade breakdown videos that you can watch. That helped a lot of traders out, okay? Because I'm going over stop loss place, I'm going over market structure, I'm going over price action in reference to where to place profit target areas. I'm talking to you through my mindset on those trades that I took. These are actual trades that I took and posted over on the Discord community, okay? All right, same ones. The Discord is free for anyone who wants to join. Now, if you want to take it one step higher and become an ultra elite member, you will receive. Let me back up a little bit because I didn't full on explain to you about everything you receive by becoming just the elite supporter. You receive all the trade breakdown videos, okay, where you can watch, all right, guide yourself through, look for these setups. I'll talk you through the setups, and you can look for the similar setups when you're back testing and forward testing yourself. But you also receive my video playlist, which is a series by series of video content that you should watch and you probably want to watch, where I go into detail about strategy again, but it goes over pertinent information surrounding how I actually trade. Also, you receive a great video surrounding market structure, which a lot of people today are struggling with understanding, and that's why they're not profitable. All that for a very inexpensive fee, which is on a monthly basis of only $6.99. Just think about that. Break that down per day, and it tells you that's pennies on the dollar, right? Or you can take it one step up and receive everything that I just talked about, as well as my live recorded trading sessions and market recap videos. So you get all that, the trade breakdowns, the video playlist, the market structure videos, the live recorded trade sessions, plus the market recap videos if you choose to become an ultra elite supporter. All right. So that's what I want to talk about. These trades that I took today, I posted over in our Discord, and I'm going to be breaking them down sometime today for our elite supporters. So if you want to become an elite supporter and have access to all that additional video content, which will definitely, I'm not going to guarantee anything because everybody's perspective of reading the markets is, is different. Could be different than mine. Could be different from the next person. But if you understand structure, then you'll understand these type setups that I take. But the video content is there to guide you and show you the strategy and how I trade. Again, the link is down in the description portion of the video. So let me go ahead and show you this clip right quick. All right, so this is trade number one. I took a short. All right. Again, I will be breaking this down for the elite members, for all those that want to understand why I took this short, and the next short that I'm going to show you just as well in the same video clip here. So pay attention here. You see me entering the trade here. Place my stop loss up here. I think this is about a 12 or 13 point pickup right here. Scalping off of my lower time frame, or lower, not time frame, but lower range chart, 24 range. Okay, the next one, another short opportunity here. As you can see, this one was for more points here. It's roughly for about 19 to 20 points, going short again. And that's really all you need, is really about 20 points on the E-minis on a daily basis to make anywhere trading one contract. That could be $400, two contracts, $800, three contracts, $1,200. You do the math per contract, and you'll see that it starts to really take off depending on the number of contracts you trade. Or you can trade the micros as well. There's nothing wrong with that, okay? I'm not saying that you have to trade the actual E-minis, but the strategy works no matter the actual market you trade in, okay? Now, again, this is a short opportunity here. Going short, my stop loss is right here. I'm looking to take profit back down towards this low right here, as you can see. And it should get filled here after pulling back a little bit. It does definitely fill my order here. So let's see. I'm looking at my higher base chart to see where I could possibly take it to. But again, I'm aiming for that low there, below, towards the low there, and should get filled here in a minute as it moves lower now. Okay, but you need to lock a stop loss in place in case the market does want to pull back, and minimize your stop in a sense, because you never want to have a more of a larger stop loss than you do in taking profit, because then you're not trading correct. I'll say that. Take it on too much drawdown. All right. So as you can see, boom, the market's going to hit my stop here, and that's going to be not my stop. I'm sorry, my profit area there, and then for some reason it started over. But anyways, that is the video there. Let me go ahead and minimize that. You can see the market is hitting off of this demand zone again. This is current time right now. This is already a tested or mitigated zone now, because we tested this actual zone, as you see here, around about what time was that today? 1 o'clock, I believe it was, right here. We're testing it again. We're bouncing off of it. So let's see. Are they going to, right now, I'm going to say we're bearish to the downside. We broke structure below these lows here, pull back, change of market direction so far, or we're going to continue pushing lower and take out this low here back to the downside. So you can see we made lows, lower highs, lows, pulling back, another low here, breaking structure slightly below this low here. I'm looking to see if they're going to close below this low here. They swiped it or broke below with that candle wick there. So are they going to reject this area here, maybe push higher and take out this area structure right here, or are they going to continue pushing lower to the downside, candle close below this, and aim to take out this low here? Don't know yet, but right now we are channeling to the downside for anyone that has a hard time seeing that. So yeah, those were opportunities right there. Again, this was a beautiful demand zone. Never tapped it. Tapped this one here on the higher base. Yesterday's trading session, again, another beautiful high probability valid demand zone with the gap resting there and right here. That's what we're looking for. I'm going to show you an example right quick where there, say for example, there was a zone, whether it was supply or demand, where there was no gap at, which means that it makes it a non-valid or not a valid zone to trade from, makes it low probability, and I like to take my trades from unmitigated, valid, high probability supply or demand zones. If you see right here, we made a low, lower high, okay, and we broke structure lower right here, and then we pull back again, and then we broke more structure lower right below this low right here, right? This is a low probability supply zone, and the reason why is because when we're looking for supply areas, we're looking at the last bullish candle to the upside, not the last bearish candle. When we're talking about supply, we're looking at the last bullish candle to the upside, run to the upside, this one here. the market came down. This was the candle here that broke below that bullish candle, okay, the bottom end of it. The next candle right here, which is that third candle, remember I talked about it, how far does it pull back in the beginning part of the video? This candle here pulled back and tapped into the lower portion of the the supply candle right here, which is that bullish candle right there. It pulled back, it tapped the bottom end with this. So if I mark the zone, I'll show you right quick. This is the zone. This candle here broke below that last bullish up candle. The next candle pulled back and it closed all the way back to the gap. So that made it it invalidated that zone in a sense. Well, not say zone, but it made it a mitigated zone, okay, which means it's already been tapped, okay. It's already that market imbalance, which would normally be resting there, is already been filled in. There's no, it's already the gap fill has already occurred. So when it comes to break structure below this area here and it starts to push back to the upside, I'm not interested in trading a mitigated supply zone. Does it work? Yeah, I mean, I'm not sitting here saying that the market will not reject again from a mitigated or tested zone, but it just makes sense if you think about areas where the market has quickly created a demand or supply area, like right here, okay, to the upside, and it's leaving very quickly to the upside. You have to think there's a lot of buyers that were trying to fill orders here, and now all orders may have gotten filled right here. So when they come back to this area, something probably is going to happen to where they want to pick up the rest of those orders to continue pushing to the upside. All right, just like right here, the market pushed up, pulled back, and broke structure above these highs. There was a valid demand zone with aggressive buying above. This is that bearish candle here. That's that demand candle there. It pushed up, created an area of demand, and broke structure right here. So when it comes back to this demand zone right here, you have to understand a lot of buying took place here, and it's unmitigated, which means there's a market imbalance resting right there. They're going to want to probably try to continue pushing to the upside. That's what we're looking for. But mitigated zones that have already been tapped into, it's a pretty good chance that they may not want to hold up there. They're probably going to break through it. As you see right here, they broke above right here. The zone still held, but look how far it came into. If I do this right here, look how far it came into the actual zone here. I'm trying to grab this and bring this out some. Give me 1 second, guys. Okay, right there. It dug deep. And one thing I do not like to see is where a candle closes on the inside of that zone. That's a strong that's a strong indication that the market may be trying to push higher. And as you can see, they would have scared a lot of people out right here, those that were selling right here. But those that were interested in selling in this area here, I probably wouldn't, more likely I'm not taking that trade because of the fact this is, first of all, it's already a mitigated zone. And secondly, because we have dug deep inside of the zone right here and closed with the candle close on the inside. All right, so hopefully that makes sense. That was the purpose of today's video, was really showing you the correct way of looking for those supply and demand zones, the ones that are valid when it comes to taking a look and understanding the flow of the market, but overall reading these candlestick charts. Okay, hopefully that helped you out. Anyone out there struggling today, again, if you want more inside information in reference to how I personally trade and the strategy I actually trade, and reviewing of trade breakdowns so you can understand these setups, and review of the market structure information and video that I put together, and review of my live recorded trading sessions, you may either want to become an elite or an ultra elite supporter. The link is down in the description portion of the video. But if you haven't right now already clicked that subscribe button, became part of the channel right now, please do so right now. Click on it. That's all you got to do is take your mouse, hover over it, that button that says subscribe, click on it, and make sure to turn your post notifications on by clicking that bell. Last but not least, if you found value in today's video content, do me one of the greatest favors, one of the greatest things you can do. Click that like button. That helps the video content get to where it needs to go on the platform and on the YouTube platform, so that people who are looking for this information, just like how you came across it, can find it, so that it can help them along their journey in their trading. I'm just here to kind of share the wealth, share the information, share the knowledge. I'm not all about the glitz and the glam. I just want to share what I know, because I know that's what's important, is being able to share knowledge. Knowledge is wealth, and it helps people get ahead. All right. Take care, everyone. See you in the next video. Goodbye.